This is Mike Hamilton from Trade Easy Way, and you can see this pink zone here is the first main trading day of 2025. Spent January, February, early part of March above it, nipped underneath it mid-March, and then when we finally pushed up here in early April, we sold off. We're getting some kind of bounce here off this extension. So the fib range is from August 6th to end of January, and so we failed, peaked above the ambush zone, then dropped underneath it, and then right down to the extension on a gap down in the Asian Open, and we're just holding on here for the moment. So a bounce could take us as high as 40,000, possibly 41,000, and then if we do not penetrate that 41,000, we're going to roll over and potentially come down to 34,000. Cyclically this time of year, pulling back is not that unusual. It's just the extent to which we pull back which is unusual. So at the moment we have had, after all these waves to the upside, got an initial wave down here, so double top up here, and then we've done a 1, 2, 3 wave correction after all these wave counts up here. So we're pretty much sort of starting afresh here. If we at any time close underneath this 36.5, we're going to come down to 34. But my best case scenario is we're going to see a push up to here at this stage, and if we fail at the 40,000 mark, then we're going to come rolling over. However, if we get above this 38,000 hold and subsequently close above 40,000, then I can see us at least zipping up back up to these highs. Okay, but my best scenario is that we're going to consolidate, bounce into the 40,000 mark, averages catch up, and then we're going to get a leg down to 34 and possibly lower. Alright, let's have a quick look at the FTSE. Obviously pretty much following suit. We had a head and shoulders up here, shoulder, head, shoulder, that was the neckline, so we broke that beginning of April. Here we are coming right into January 23 numbers. So I would imagine that we would punch into about 7,800 and then wind our way back down here. If we have a significant close above this 77.5 and into 8,000, then I think we can recover. My best scenario is on this one, of course, is we'll bounce potentially into 8,000, 8,002, and then leg down, and then if we can hold down here, then we might break out of there midsummer. Alright, gold is coming right off into this February 25 support. That support is 29.30. The key breakup area was 29.30, so if we have 29.30 down here and hold, I think we could clamber back up. But in the meantime, we're seeing a lot of red bars here. Powered up there to 31.70, now pulling back. So if you look out for 29.30, see if that holds. See if that drops down there and holds, and then that might ping up. So let's look at some basic stops. Let's go through the basic stocks and keep this nice and short. BT. So had a nice move into Thursday when the market's already selling off touched 174 and here we are down at 154. So we've reconnected with this moving average. So we could come down as low as 145 here. You know, if you've got decent profits up there, 170, 175, particularly if you bought down here. I talked about 130 a while back. You know, if the RSI is high and you've had a good run, then the chances are this is at least going to pull back. If you're in this for the long run, and you still got some profits in this, then fine, just stay put. Let's see if that holds. So that will take us into the 150 area. If the 150 holds and we pull up, we could then go and find the 180. So at the moment, that's a initial wave down there. So we could perk up to 160 and then have another wave down to 145 or lower. Okay, so short to medium term I see that as lower. Longer term I can see that going to 180 plus. And let's have a look at sort of EasyJet. EasyJet's come down to August 24 lows. Closed at 425, 426. Obviously it's a lower close, a lot of red on this chart at the moment. I would imagine this would retest 4. If we come down to 4 and hold, bear in mind that oil is very weak, which will do the airlines a massive favour. If we pop down to 4 again and hold, maybe even dip underneath it. And then if that works and we can get some volume going onto the upside, start closing above 425, 450, and I think we can climb back up. Bearish scenario is we close underneath, come down under 4, and then we go into 350. But at the moment I'm looking at the bullish scenario and £4 holding and they're going higher. I'm in IQE. So taking a little bit of heat on this, I think I got in about 11 actually, might be about 10 and a half, 11. So we've come back down to November lows. After that November low we went up to 18 and a half. This is a very speculative stock. They are a particular specialist chip maker. Okay. So I'm flicking around here. Wheat is attempting to hold here on volume. You can see the pattern I bought. If we close above 570 anytime soon, that could send this much higher. The crop report came out last week, saying this is the lowest level of planting on record, I think. But the stores are high. Storage of wheat. Storage levels are very high. So if we get some dry conditions over the summer and yields are poor, then that could yank this up. So fundamentals really matter with these soft commodities. And moving on, let's go through a few more stocks. Prudential, got out of Prudential at 775, dipped up to 850, and here we are. We've just retested 680 something. You never know. We could come all the way back down to £6, but we had a big break up at 670. So 650, 670. If we come down and hold that one, then I'll get back in and try and trade that back up to £8-9. And right, let's go to my main list. Orange juice, not doing it. The only way you can trade orange juice direct is the futures market. There's no individual ETF of orange juice. There are some mixed ETFs that include orange juice, but if you're not going to trade futures, then you need to go into one of the soft ETFs. Let's look at Barclays. That's gone all the way down to 224. Now that is a huge area from October last year. So if we see that 224, ideally in £2, 212, that I think is a buy. Barclays has done very, very well. So if that plays out down there, I'm in. Let's look at some more financials. Pension B. Ooh, that's really fallen off. It's had an extension, so we had a big break up around the 123 here, 120, 123. So that could have come all the way down to 118. Just need to bide your time on these. I'm not same sector, HA Bell, same chart pattern, pay. There's one that's not on here I need to add, and that's Wise. This is another payment service. Yeah, similar. So that's come right off. If that comes down to £8, wasn't that? It was 11.28 not so long ago. So these are substantial pullbacks coming into key areas across the board. That one, QQ, it's on my watch list, as you can see all the markings. Can I stay out of that and see if we can get closer to £3? It's a defensive stock. Vodafone. So you can see a lot of good stocks really pulling back quite hard. Let's see what's and coming into major support areas, but yeah, we need to bide our time because we are a long way out of the woods on this one. Anything? Let me just double check my other visual checks. No, and that's all I've got for you. This is my one of my many stocks on my watch list. Failed, dropping into support, and that's just the general story. Can't find anything. National Grid were doing really well. Let's have a look at National Grid, just to prove that some stocks. I hadn't seen that. I saw this power up on Thursday. It's a very, very similar pattern, isn't it? Charged up. A lot of stocks even didn't survive Thursday. A few did, like BT and National Grid, and now they've come right back into support. So I would love to see this 945 lower. Otherwise, that is just my watch list. You know, just a reminder: cash is a position. So just because you're not in stocks right now. If you're sitting on the sidelines in cash and you've taken profits and you've managed your account, well done. If you're in stocks and you're suffering, think about where your stops are. Have you given it too much room? Have you given it enough room? I've been stopped out of a few things like EasyJet and just sitting back and took profits in a good few stocks in the run up to this, particularly Prudential. Otherwise, yeah, just trying to exploit the indices and sitting back and letting this sort itself out. All right, more on that in the near future. Thanks very much for watching. Bye for now.